Hello. ये हमारे पास open of the day. Just taking the mic now. Just give me a minute. तो ये हमारे पास अभी जो प्राइस चल रही है क्यूज के ऊपर right above the moving average, right above this price point, 563.88 वो level है. That's that level जो कि it's gonna give some sort of a support, बहुत ज़्यादा strong support. So I am looking for some sort of a swing trade right around this point. Overall, the market is in always in long as we are above the moving average on the 5 minutes, the 20 period moving average on the 5 minutes. अभी this is the last 30 minutes. 30 minutes के बाद हमारा डे क्लोज हो जाएगा. Let's see how this is gonna go. There are things to keep in mind, जैसे कि हमारा ये वाला ओपनिंग रेंज गैप है. ये हमारा इनिशियल 15 minutes. We right at the 50% of the 15 minutes range above the moving average. अभी हम लोग let's see it on the 15 minutes. Okay, the whole day was a chop, right? We The first 15 minutes was a bear bar. Uske baad next was also a bear bar. So we got some sort of a wedge around the opening range. Then we moved up, made an extract expanding triangle. So we are right in the apex of this triangle. If you cannot see it properly, I'm gonna draw it. here. So that's the apex of this triangle right around the 50%. 563.63. 500. 63 to 563. So I'm going to drag this price across. So that price is equals to above the 20 period moving average on the 15 minutes, above right? Right above the 20 period moving average on the 5 minutes time frame, both the 5 and the 15 minutes, right? So this price is where I'm looking for some sort of a support point for me to go long overall. Let's see what happens. So based on this idea, I can potentially target this point, which is the 10:30 opening of the candle. 10:30 opening of the candle, that candle on even on the 30 minutes time frame is inefficient. This is the inefficiency I'm talking about. So we will potentially take out this inefficiency. And the Asian highs are still untagged. So that makes it a very high probability that we are going to continue towards the upside. Okay. But for that, I need a validation. I need some sort of a validating criteria. That validation can be we need to close above these two white lines, which also refers to the monthly open or the monthly volume imbalance. Without it, I cannot basically go long because the market is more biased towards the downside. So it's risky taking a long ride around this point, but it's more likely to go higher than lower. Let's see. Okay, yeah, there's one more thing I need to update on the chart. Just the thing or that price is equal to 178, 23,178, 23,178 was the price. 23,178. So I'm gonna yes. So that's the criteria I'm talking about. I need the price to move above 178 for me to be more interested in long, using this point as the line in the sand or the invalidation criteria, putting my stop loss right beneath this point and this point. So it gives me a lot of confidence to go long. Coming back to the 15 minutes is clearly more bullish than bearish. We got a closing above, we got another closing above, another closing above. So these two closes are above the 15 20 period moving average on the 15 minutes time frame. If I take a measured move, it will take us back to 232. Take us back to 232. Let's see what it equals to on the regular trading hours. Okay, and also one thing too, if I take a standard deviation of this point, it takes us to 556.52, right? And if I take a standard deviation of this point, these two legs both are pointing towards the high of this candle. So let's see. If I get a good confirmation, I'll be more than happy to go long, aiming for 1 times my risk. But since the whole day was a choppy day and is basically right, 23 minutes left to the day, I'm not really expecting much, but that would be the general idea if I were to go long or be interested in the trade. Coming back to the main time frame, that is our 5 minutes. I don't want to see this candle close below this green line. Let's make it a little more bold. Green line and beneath 63.63. If it closes below 63.63, then it's more probably to chop around a little more because it's reacting to this level. So it's more likely to stay within this range other than break out of this range. So I do not want the next 5 minutes to close below 563.63. Now we have closed below 563.63. That is an indication that it's more likely to stay within this trend rather than to break towards the upside. So it's more likely to stay within this range, and I am using now the ranging strategies. Basically, the strategies which are applied for ranging conditions are exactly opposite to the strategies which are applied on the trending time frames, right? Trending markets. So in these conditions, now the market is indicating me that this will continue to stay within the range for the next 25 minutes. So the day has basically 25 minutes left to it. Let's see how the price reacts to the moving average. If this bar closes as a bear bar, that would be the 72, 73, and 74th bar of the day. In total, we have 81 bars within the day. So these are the last basically 3 or 4 bars left to this. Let's see it on a little more higher time frame. On the 15 minutes, that is still valid. If we somehow stay above this point, that will still be valid. But see, the same logic which I'm applying on the 5 minutes is exactly the same logic on the 15 minutes. So on the 5 minutes is right around this close, it indicated that it's 60% more likely to go down and stay within the range for the rest of the day rather than continuing its path towards the upside, which was a standard deviation of this move. If I take a standard deviation of this move, that is equal to 565.35. If I take a single standard deviation of this move, that is approximately both levels are equal. But since we are in a ranging market, it's more likely to chop around and close the gaps. So where is the next gap? This is the next gap, right? This is the next gap. On the 15 minutes, we are trying to close below the moving average and close below the last validating candle. So this is the last validating candle on the 15 minutes. If we go in a smaller time frame, that we got invalidated, that the closing, we got a closing below the prior bar low, another closing below the prior bar low, which was the dealing range. So basically this was the dealing range, right, on the 5 minutes. Okay, we got a closing below the dealing range. Coming up a higher time frame, the dealing range expands because of the ATR of a single candle. So the dealing range on the 15 minutes is the low of this candle, which is 3 o'clock candle. 563.40 is the invalidating criteria on the 15 minutes. We have around 6 minutes left to this 15 minutes. Where is the next gap? This is the next gap on the 15 minutes. So the bears who bought the close of this bar, they got trapped. Bears who bought the close of this bar, they are trapped. They have more likely to sold right around this point. So they'll get out right around this point, making some profit. We have 5 minutes left till this candle on the 15 minutes is going to close. So now I'm waiting for the market to either to basically chop around. In that conditions, I'm not interested in taking a trade at all. Literally no trades. So if it starts to continue its trend towards the upside, then I'm happy to take a trade in general. So it's better to stay out of these market conditions because, as I can assume, as I'm betting on a ranging conditions, and the market is already telling me that it's more likely to stay within the range and chop. Why would I invest my money in risk when I already know? And even the market is indicating something. Okay, so things to keep in mind. We have 5 minutes left till this 15 minutes candle is gonna close. The time frame I'm operating on are two time frames. The shorter time frame is the 5 minutes. We got a closing below the 5 minutes, making it a 3 bar micro channel. So 3 bar micro channel. If I sell the close of this bar, let's see, hypothetically, right? If I sell the close of this bar, 1 times my risk is equal to 562.51. So that is more likely to occur. Basically, one push down, second push down, third push down. So on the smallest time frame, on a 1 minute, we got a rally, right? We might chop around here for some time. Okay, now look, this is amazing. We have 3 minutes and 55 seconds left to this 15 minutes. I am watching if the market is going to invalidate the 15 minutes criteria or not. If the market invalidates the 15 criteria on the 15 minutes, then it's obviously more likely to come back to 562.50 because first assumption was it's a trading range. What happens in the trading range is the gaps are going to get closed. The market is going to make an impulse. For example, this was the impulse. It's the market loves to make two-legged traps, two-legged traps coming back to the third leg. make a double bottom, some sort of this point. So it's going to continue within this sort of formation, making it a range, right? It's making it a range. So on a shorter time frame, I got a confirmation right around this point that it is more likely to stay within the range because the whole day was a chop, right? The whole day was a chop. So this was the invalidating criteria. We got our first leg, second leg, third leg, got a retracement. Now, the bears who sold the close of this bar, putting stop loss right above this point, they will get out one times their risk right around this point. So, this is more likely to happen than market moving upside. Let's see. Okay, another thing to be careful of. Let's see if the market stabilizes below the moving average or not. I want to see the market stabilizes below the moving average. This is the second bar, which is going to close below the moving average, but it has a tail above the moving average, which is not really ideal, but still. Okay, coming back to 15 minutes, I'm keeping an eye on this 15-minute candle because it's going to make the whole context shift. For example, in the last 30 seconds, this 15 minutes can just close above this low, closing above the moving average, then it can shoot up higher, invalidating the 5 minutes criteria. But as of now, it's more likely to go down than to the upside. So in this case, what is more probable? There's basically a 60% more chance that the bears are going to make money and continue to make money, and they'll get out right around this point, and the market is in an overall range, making two-legged pull for two-legged traps. This was the first leg. We got our second leg. Okay, so the people who bought around this point, they are trapped. So in trading ranges, what is the best rule in the trading range? Best rule in the trading range: never trade the third leg. Never ever trade the third leg, even on the trending markets. In the trading range, never trade the third leg. First leg, you take a standard deviation of the first leg, right? If you take this, if the bulls who bought the close of this bar, they'll get out right around this point or this point. Okay. Okay. So the 15 minutes about to close. Let's keep an eye on this criteria. We have 26, 22 or 30, 18 seconds left to this 15 minutes candle. Now everything can change. Last 11 seconds and the last 45 minutes of the day. Last 45 minutes of the day, the market is about to close. So it's going to tell a lot of things about this. Okay. You see this point? Now the bears who are going to sell the close of this 15 minutes bar, putting their stop loss right above this point, they might experience some sort of little bit of hell because there's a gap. But overall, they are more likely to make money rather than pulls. Okay. Until something shifts, because it's overall a trading range and a low probability criteria. Okay. This was at 75 was basically a doji bar. Let's assume, let's take the close of these three bars, right? The bears who sold the close of the 335 candle, they are aiming for one times their risk, so their target is right around this point. One. Okay. So the bears who sold the close of this bar, they will more like they are gonna take partials at 62.94, and they're gonna close the whole position right around this point on the basis of assumption that we are in a trading range and the trading range is gonna continue because it's very late in the day. So what happens usually is at very late in the day, the price will continue to do what it has been doing. So the whole day was a big expanding triangle. The whole day was a big expanding triangle. See this point? At the open, we made a wedge, three pushes down. We got first leg, second leg, third leg. We got three pushes down, two pushes up, making it an expanding triangle. Left an inefficiency right around this point, 566.52. Now we are 566.52. I'm going to mark this inefficiency as bright yellow color because it's temporary. So, okay, keep an eye on this price. Now, how many bear bars do we have? First bear bar, second bear bar, third bear bar. The bears who sold the close of this bar, short position. This is a hypothetical position. I have not entered this position. I'm just telling you this now. In general, I'm reading the tip as of now. I'm reading the tip. The bears who sold the close of this bar, what is one times their risk? This price is one times their risk. So they will get out right around this point. What was the obvious sell for the whole day? What was the obvious selling point? What was the reasonable selling point for the whole day, right? Was this bar on the 15 minutes 115 candle, was it a reasonable sell? No, it was not a reasonable sell, right? The bears who sold the close of this bar 945 candle, that was a reasonable sell. Okay, so the what happens in the trading range is you basically fade new highs or new lows, right? So the bears who bought the close of this bar, they bought lower, they bought more low and scaled in and got out with their profit and break even, right? So, okay, we have 12 minutes, and right about around this last minute, the last 10 minutes are going to open, and the market on close algorithm is going to run. Last two 5 minutes candle, this is going to be an extreme volatile period of the day. Last two candles below the VR, below the moving average. We have closed below the moving average on the 15 minutes, but still does not really count. The reason why it does not count is because we are in a trading range. In trading ranges, because the moving average is what is the moving average other than basically a mean. So when the price is gyrating around the mean, it really means that the price is in equilibrium of some sort, in the market cycle of equilibrium of some sort. So in that period of time, the moving average is gonna be a gravitational pull. It has a gravitational pull. So market is gonna gyrate around this point. So as of now, I'm not gonna put moving average as a priority, but in general, I'm not fixated or I'm not giving it higher probability other than 60/40. So as we have closed, I'm making a case. As we have closed below 330 candle, leaving a gap right around this point on the 15 minutes, and on the 5 minutes we have one bear bar, two bear bar, three bear bar, right? Haven't got a close above the prior bar high. So all of these reasons makes a good case for the bears. So what am I definitely not doing? I'm not definitely not buying this. Okay, so if I put money right around this point, I'm 60% more likely to make money and say 40% likely to lose it. So it all depends on the context. 300, 351. So what happens usually happens in the range of, and what is the validating and invalidating criteria I'm keep repeating about. So what was the last validating candle on for the bears? 315, 335 candle was the last validation candle. Since we are in the range, it's gonna chop around, chop around, chop around. If, for example, my stop loss is right around this point, Hypothetically, my stop loss is right around this point. Okay, so what will happen if what is going to happen that is going to change the context if we close above, if we basically close above 335 candle, that invalidates the bearish criteria and the narrative. So I'm not going to be taking a long or the short unless it gives me another opportunity. So 3 minutes left to this 5 minutes candle. This was the first leg. We might get some sort of a second leg taking us somewhere here. 52 on the 15 minutes. We are very close to closing this gap. Once we close this gap, we can turn around. Watch. Okay, if I go to a lower time frame, we try to close or stay above the moving average. We are failing to do that. Coming back to 5. We are failing to close above this 335 candle. Let's see if we can get a closing above the moving average or if we fail to close above the moving average. Last 5 minutes about to open. As soon as this bar is going to open, it can do some volatile shit. 32 seconds left. 32 seconds left. This can be the first leg. This is the second leg taking us. It will probably take us back to 562.52. We closed above the moving average. Not the best looking bar. This is the last bar of the day. So, yeah, last bar of the day. Let's see how it's gonna close. It's probably gonna chop around, not gonna do much, but still, let's see. If any of you are interested in Solana or Bitcoin, let me know in the comments. Yeah, it's more likely to stay or chop around this point. We are very close to closing this gap. We are very close to 63.57. 63.57. Okay, things to remember or things to keep in mind. Or uh, we are still below 300, the 335 candle. We need to close above 335 candle, right, to invalidate the bearish narrative. Otherwise, it's all more bearish than bullish. If I come back to the 1 minute time frame, if the 1 minute closes below up, it's still its own moving average. We got a closing, we got a closing, right? We are getting rejected out of this line. Let's see if the price can sustain it or not. You're getting rejected. If I take a short right around this point, it's a hypothetical short. It's not a real short, it's a hypothetical short above. What will be the one times my risk right around this point? Will be one times my risk. We have 2 minutes till the market is gonna close. The whole trading session is gonna close. I'm not telling you to go short or go long. I'm just telling you how I'm reading price or how I'm looking at it. If the price comes again above the moving average, I will close the trade. Since we are very close, we have very 2 minutes left till the day is gonna close. I'm not gonna be greedy. So let's see. Okay. Now my criteria is getting tight and tight. What do I mean by my criteria is getting tight? If we even on a 1 minute close above the moving average or above the prior high, I will be more than happy to close the trade because I'm not going to risk. These are low probability trades. These trades are those trades in which my lot size is lower, and these are just curiosity trades in general. 10 seconds left. If we chop right around this point, I'll be closing this trade. And the market is closed. The market is closed, but the trade is still here. Don't worry about that. The trade is still at point. So that was the criteria, right? No, that was not the criteria. Was the criteria sold right around this point, aiming for here? So something like this. But still, I'm gonna close this trade. I don't have enough time to wait for it. So okay, see ya. Until next time. That was the criteria, right? The market is closed, but still I can till 4:10 o'clock, right? I was risking 25 points to get 33 points. So basically a good risk to reward ratio. I'll be getting out right around 25 points because that will be equal to one times my risk. Okay. We have a volume imbalance around 18 and a lot of wicks right around this point. So I'm just generally targeting this point, which is 100, 107. I'm 15 points in profit. Okay, I'm good to go. Okay. See ya. Until next time. See ya.